This is your stock market investing tips for beginners. We're going to cover investing tips for beginners and how you can become a better investor and make more money. We're going to jump right into these investing tips. There's going to be 10 of them. I'm not going to cut or edit these investing tips. Here we go. Number 1, buy stocks that you understand. Again, this video is crafted for beginners, so I'm saying, buy stocks that you understand. For example, let's just say that you like Tesla. You like their vehicles and you think that their cars are great, and you think they're going to have a great future. You know that's the starting point. Same thing with Apple. Back in the days when the iPhone came out and you thought that that was revolutionary and that's going to change the cellular phone market, you know, oh, this is so much better than the BlackBerry or whatever else is out there in the market. You can understand that. You understand what their product is. You understand what the company sells. It's very straightforward, relatively speaking. This is compared to, like, a Bear Stearns. If you're trying to analyze the balance sheet of a Bear Stearns back in the financial crash with CDO Dell, like, come on. That's gonna be so much more difficult. Therefore, I'm saying, for beginners, if you can easily identify, you know what the company is, what the company sells, you're gonna be better off. You're gonna be making better investment decisions. For example, Chipotle. The business is straightforward. It doesn't take a rocket scientist to understand the business. Again, this is compared to very technical companies that you should have known. You should not be touching those stocks that you completely don't understand, don't even know how to analyze. Let's go into investing tips. Moving on to number 2, let's cross that one off. You need to understand how the stock is doing relative to the markets. It's all relative. If the stock is up 10% for the year, you can't say, oh, the stock's doing great. Or, I'll give you an example. If that particular stock is up 10%, but the general market is up 20%, then your stock is actually not performing well. You need to take into consideration how that particular stock's performance is doing to the relative market. It's the same thing on the flip side. If the stock is down 5% for the year, you can't say, oh, that was a bad investment decision. That was a bad investment choice. Because if the market is down to 20%, and your stock is down 5%, that stock pick is actually doing great. You did a phenomenal job. Therefore, you need to take into consideration how that particular stock, that specific stock, is doing compared to the industry, how it's doing compared to the general market. So, please keep that in mind. Investing tips. Here's number 3, buy in over time. You want to take a staggered approach. Let's say, for example, that you have $5,000. I would not recommend taking that $5,000 and just investing all that, all at once. Just take, like, a piecemeal approach. Invest that money over time. Or, here's another example. Take a portion of your paycheck, whatever the percentage that may be, and just keep buying into the market, whether you think the market's overvalued or undervalued. Just continuously keep putting in a piece of your paycheck every month into the stock market, just taking up a staggered approach. Don't just go all in at one point in time because it's just a safer approach. Because you might get all your money in, you might get lucky, you might get all your money in at the very bottom. Or if you're unlucky, you might get all your money in when the stock markets look at all-time high. So therefore, it's just the better, safer, and more conservative approach to get your money into the market over time, just piecemeal rather than all at once. Investing tips, here's number 4, avoid penny stocks, especially if you're a beginner. My definition of penny stocks is if you're going to go to the OTC market or the pink sheet market, the parks, just don't even try it. I mean, they're not even regulated. You're just asking for a disaster. These I'm talking about, the stocks that are not on the NYSE, the New York Stock Exchange or the NASDAQ. Okay, even the Amex is, that's one thing. But if you're talking pink sheets, they're OTC's BBS, it just don't do it. You have to be such a seasoned, very experienced to actually find like a hidden gem in the pink sheet market. But even that is super dangerous and risky. Therefore, you got to really know what you're doing, have a lot of experience. If you're new to this, don't go to the pink sheet market, let IC markets. Please don't invest in penny stocks. Investing tips, number 5, remember about taxes. People have this misconception that if you have a gain and you leave the money in the brokerage accounts, then you're not going to pay taxes on it. If you sell your position, if you sell your stock for a gain and you still have the money in the brokerage account, it's still taxable. It's gonna show up on your 1099. Be there for you have to take into consideration that you're gonna have to pay taxes. you most likely will pay taxes on your gains. Just remember that, so mentally set some money aside or send an estimated tax payments. But just remember that there's going to be taxes under capital gains. Regarding taxes, if you sell your position for a gain and you held it for less than a year, you're going to be paying a higher tax rate. If you held your stock for a year or more and then you sold it, those are long-term capital gains. You're going to be paying much better tax rates. The tax rates will be much lower than you would ordinarily pay on income that you made. Those are some things to take into consideration when it comes to taxes for your stocks. Investing tips. Number 6, you need to control your emotions. You need to be disciplined. Some people, they cannot control their emotions. They're going to be looking at their phone, their stock app, like literally, like once an hour, maybe even more. Don't be that person because you don't want your emotions tied to it. You're going to be making errors, you're going to be making bad judgments if you have your emotions tied to investing. So keep emotions off the table because that's generally going to lead you to lose money and make bad decisions. Especially if your stock's doing good now, don't get super excited. If your stock's going down, don't get super depressed because, it's going to affect your emotions, and you can make bad decisions. If the stock's going down and you're getting scared, you might sell it at the worst points. Or if the stock keeps going up and up and up, you don't want to hold it, forever. If it just keeps going up, that's the thing. It's going to come down sooner or later. I'm not even talking short term, I'm talking long term as well. Have an exit strategy, plan things out. Therefore, if it hits your targets or your target range, let you know that it's time to get out. So, have a plan. Pre-Clinton investing tips. Going to our last one, not investing at all. A lot of people might think that the stock market is overvalued. Therefore, I'm just going to wait on the sidelines. I'm going to be in cash, I'm going to wait and wait and wait. If you were doing that 10 years ago, then you would have been on the sidelines for this whole time as the market now ran up for the past 10 years. People said the stock market's getting too high, it's going up way too much. I'm going to wait for a big pullback or I'm going to wait for the next recession. It didn't come for 10 years. Therefore, not investing at all could be a big mistake. Again, this is going back to what tip was that? That was tip number 3, buying over time. Do you want to take a staggered approach? That way, it's a conservative approach. You're minimizing your chances that on both sides, you're minimizing that you're not buying at the top, you're not buying at that low. Therefore, it's a conservative approach. You at least eliminate the possibility that you just totally miss a good wave where the market's doing well. Therefore, just sitting on the sidelines not investing at all, that's a huge mistake. I hope you enjoyed these investing tips. There will be more to come. And please subscribe and see what we are buying in our portfolio. And you can follow along and you can use the affiliate links below to get you started. You'll get a bonus for signing up for a stock brokerage account. We get a bonus too. You get a bonus, and we all win. Thanks so much, see you next time.